Hello everyone, welcome to Best of Us Investors. We as a tribe are gathering in the Discord server, where we share Carrie's portfolio, Carrie's buy and sells in real time, and we have live discussions every Mondays before the market opens and right after the market closes on Fridays in our voice channels in the Discord server. And of course, we share insights on stocks before the videos are released. The stock analysis team also analyzes stocks based on the votes from the tribe members. So hope to see you all in the Discord, where the link is listed in the description to join. We would also appreciate if you can subscribe and hit the like button, which will help our stock analysis videos. Now let's get started with our stock for this week. Today we'll be talking about Palantir. The ticker symbol is PLTR. So Palantir builds and provides a software platform to assist in counterterrorism investigations and operations. It's also being applied in various sectors, specializing in big data analysis and optimal decision suggestions. The company provides Palantir Gotham, a software platform for government operatives in the defense and intelligence sectors, and Foundry, a platform that transforms the ways organizations operate by creating a central operating system for their data, allowing individual users to integrate and analyze the data that they need in one place. So the company was founded in 2003, backed by Peter Thiel, the co-founder of PayPal with Elon Musk, and an early investor of Facebook. It also has Alex Karp as the CEO, and I recommend that you watch some of Alex's interviews on his vision of the company. The Palantir utilizes a system using digital twins called the Ontology Simulation Engine, where it creates an identical digital twin copy of the real world. And the cool thing is that they can simulate or enable operations and changes that can be staged and tested before they are actually applied real world, and can understand the potential outcomes and side effects of a decision before they actually execute on that decision. Along with these simulations, the entry of the decisions made are stored in the system, making it even smarter so that they can come out with an even more optimal solution for future decisions. So for instance, if you have a new project, instead of starting from scratch, you already have a compounding framework in the system that should be most optimal for that case based on the data analyzed. More exciting is that this framework is bidirectional, meaning all user insights and decisions are recorded in the ontology engine, making the system even smarter every moment. Now, if you think about it, nowadays we have an enormous amount of data. So having a ton of data is nothing new. The issue is that there is too much data stored in so many different locations that do not communicate with each other. So Palantir is connecting the dots, the data points, and coming out with an optimal smart decision suggestion. Palantir focuses on three major areas. The first is partnering with government organizations, providing their platform Gotham for better decisions. They are working with the CIA, DHS, NSA, FBI, CDC, Marine Corps, Air Force, and the Army. So I think we can even say that they are a government-backed company. Now, in 2020 October, the U.S. Army Research Lab selected Palantir for a $91 million contract on AI and machine learning development. In 2020 December, the U.S. Army renewed the second year of partnership with Palantir on the Army Advantage program for a total price of $114 million. And in October 2021, the Army selected Palantir for intelligence data fabric and analytic solutions. In 2020 December, they expanded the FDA partnership with a $44 million contract. And Palantir is also providing coronavirus monitoring to the CDC, which was renewed on June 2021 to monitor the outbreak responses. The U.S. Coast Guard renews partnership to fight COVID. And in October 2021, the NIH continues to collaborate with Palantir to support COVID-19 research. And if you go into their website, there are a ton of more partnerships that you can see. To me, this all strongly suggests that Gotham is a very, very sticky platform, since if you think about it, government contracts are not usually temporal. They don't just pick random companies for their data, and they don't keep switching companies in and out. So the government are very picky on selecting their partners and would want to use their platform long term. Also, regarding data sharing, if the government, FBI, CIA, and the United States military is willing to partner with this company, that is a tremendous amount of trust. So this is phenomenal for Palantir, since if their system is good enough for the military, FBI, and CIA, I'm sure a number of companies would want to partner with them and feel comfortable regarding security. They are also working with large businesses like Fortune 500 type companies, including BP, Airbus with their Skywise program, 3M, IBM, and much more, growing their partnerships enormously and assisting these corporations with much more efficient decisions with less errors or less financial losses. The third sector that they are involved with is supporting promising startups. They are helping certain startups with their data needs, and then if they think the startup company has a big idea, great team, and visions that Palantir can help them moving forward, they seem to like to make an investment into those companies. Now, these companies include the flying taxi company Lilium, Sarcos Robotics, a leader in the robotic systems, developing robotic systems for the workforce, Cellularity, a clinical stage biotech company where it's focusing on curing cancer, and much more, as you can see on this slide. So if any of these companies do succeed in the future, Palantir already has a position in them, and it will work hard together in order to make them successful. And don't forget, they also have Peter Thiel with them. In order to think of the total addressable market, it's really hard to answer since they are in so many different industries. And if you think about it, all you need to do is apply their system on the data that they already have, and it will improve the company's outcome and will get better and better over time with all the data being stored each day. So just to get an idea, let's see the total addressable market in a number of sectors they are involved in. So the defense industry was around 700 billion in 2020 and projected to be approximately 900 billion by 2030. The CRM industry is already around 40 billion. And of course, the artificial intelligence industry is projected to be around 300 billion by 2026. And this is just a couple of industries they are involved in, which are already exponentially growing sectors. In my opinion, I think Palantir has an amazing moat where not even Amazon or Google would be able to replace them. They have been in this business for almost 2 decades, building relationships with governments and accumulating an amazing amount of data, which takes time. We also have Cathie Wood purchasing over 34 million shares, ranking Palantir in the 15th place, and is actually in all their ETF funds. So personally, I have been invested in Palantir for quite some time now, and is a stock that I will keep for at least 10 years, if not more, and will happily dollar cost average in if we ever have a major crash.
Starting off with competitors, Palantir is a very complex company. They don't have any real competitors that reflect every facet of the company, like PlayStation and Xbox or Nike and Adidas does. They've got companies that overlap on some of the things they do, but only to a certain extent. We've even got some companies that try to replicate specific products of Palantir, such as their Gotham service. However, there is no one company that offers data visualization to the same extent and degree as Palantir does, especially combined with Palantir's other capabilities. Palantir has a market cap of 46 billion and produces a revenue of 1.3 billion, trailing 12 months. And this gives them a PS ratio of about 35, which in itself isn't that high compared to some of the other companies that are somewhat alike to them. However, Palantir has been in this game for a long time and they're still not profitable after 2 decades. Also, their price to book ratio is about double that of all the other competitors. They are still not profitable and have a high operating ratio of about 2. Now, for the cons, Palantir has been diluting their stock drastically since the beginning of the year, and that combined with the big load of insider selling that's been going on makes it difficult for shares to appreciate in value. In addition, you have the huge amount of stock-based compensation that Palantir uses, diluting the stock and making it even more difficult to appreciate in value. And as I said, they have a high price to sales ratio, which as a result requires a even more significant growth rate for the company to reach its current valuation and have a PS ratio more alike to that of what's the norm in the field. If they'll achieve such growth, it's still a matter of dispute, as there are some who say yes and others who find it unlikely that the company will be able to generate an annual revenue growth of more than 3.5 billion by 2025, considering the backlog of contracts, of the contracts they have now. Furthermore, the company has been unprofitable for 2 decades. And let's not ignore the fact that Palantir stock has depreciated by 40% since their all-time high and has been moving pretty much sideways since March. Now moving on to partnerships. First off, Palantir's stock was recently rocked by two major developments. The first one was the report that came out of Palantir potentially losing its contract with Immigration and Customs Enforcement, or ICE. Their whole contract with them has also been a matter of a lot of controversy. However, the second development, which made the stock rebound after the dip caused by the first segment I just talked about, was that Palantir secured a new contract with the US Army. Another partnership is with Wejo, a global leader in connected vehicle data that's set to go public in the near future. Together, Palantir and Wejo made a deal to create an integrated data ecosystem for the automotive industry. And in addition to that, they are also partnering up with Black Sky, a company focused on real-time global intelligence using satellites. With Black Sky's technology combined with Palantir's platform, Black Sky hopes to bring in a lot of more new customers. And finally, Palantir is expanding its health and defense-related work with its first major contract with the Department of Veterans Affairs. Palantir has been pretty active on these contracts recently. I mean, they've been announcing more contracts in the last 60 days, it seems, than in the entirety of 2020. That's all I had.
Okay, so today we're going to talk about Palantir Technologies Incorporated, look at the financials, see what's under the hood. So if you look at the condensed consolidated statement of operations for the 6 months ending June 30th, 2021. You can see the revenue has gone up 716.8 million compared to 481.2 million from the previous 6 months in 2020. But then you can see that also the operating expenses have gone up also to $812 million, which brings the operating loss to $260.1 million. The net loss then is $262 million compared to $164 million, which gives you a net loss per share of 14 cents, which looks better than it was in 2020, which was 28 cents until you look at the number of shares that have been created. So we've gone from 616,000 shares to 1.8 million shares out there. So shares are being created to fund this company, and a lot of it is in stock-based compensation, diluting your shares every time they do this. So from that point of view, still not profitable. The revenue is going up, and we'll talk a little bit more about that later. So we go into the balance sheet. We look at the assets. You can see $2.3 billion in cash on hand, which is really good. Their total current assets exceeds their total current liabilities, so they have the ability to pay off short-term debts. But there's something there. You can see the deferred revenue down under current liabilities of $682 million, which is pretty interesting to me. So the balance sheet doesn't look too bad. We go to the cash flow statement. You can see we start out with the net loss of $262 million. You can see that stock-based compensation is $426 million that they put back in because that's a non-cash ledger item for them. So they add that back in, and then the net result is when you go to net cash provided by operating activities, you can see that they're up 139 million instead of being down. So there's the canary in the coal mine right there, stock-based compensation. That is my big problem with this company. They keep giving it out. And in fact, as of June 30th, stock-based compensation accounted for about 11.25% of total shareholder equity. So exercising these options will add new shares and erode your shares as a retail shareholder. So I expect that as long as the stock-based compensation's out there, you're going to have eroded shares. And this is the main reason why I will not buy this company at the present time. We look at net cash from investing activities. You can see that's a negative $1.4 million. The proceeds from the exercise of common stock options, there's where you see the cash coming in, $376 million as opposed to 28. And the CAT provided by financing activities is $174 million. So you can see they're not making money from the operations, even though they show that it looks like they are. From my point of view, they're not, because at some point those options will be exercised and your shares will be diluted. From a technical point of view, if you are going to look at getting into Palantir and you're like technical analysis, basically you can see that the MACD is negative. You can see that the RSI is around 39, which is not a good sign at this point. And you can see that the stock is trading at $23.50 as of this recording, which is below the 9-day moving average, 50-day moving average, and the 200-day moving average. So at this point, most people would not be buying until it would cross back over, get out of the death cross scenario right now. So if you are looking to get into it, I'd watch these charts as a point of entry. Right now is not the time to do it. So if we go to my summary for Palantir, revenue is growing. That's a plus for me. The operating income is negative, so that's a minus. The net loss is growing. That's a minus for me. Per share earnings is negative. That's a minus for me. Shares outstanding are growing, which is a big minus for me. The shares keep growing to finance this company, and they don't offer dividends. They certainly don't buy back their stock. So that doesn't tell me anything good about what they're doing at this point financially. Current assets exceed current liabilities, so that's a positive. Stock-based compensation is increasing, so that's a negative. Liquidity, most cash is coming from the financing activities, so that's a negative for me. And then if you look at the technicals, like we talked about, the RSI and the MACD and the moving averages all show that this is probably not the time to purchase Palantir, so I would not be purchasing Palantir. But I would not also be purchasing Palantir until they got rid of this massive stock-based compensation that's going to keep dragging the company down. This is a company that I call press release company. If you want to swing trade on it, it's probably a pretty good company because they'll come out with a press release like the Army contract, and then you'll see the stock go up. And then when that wears off, it'll go back down, and you'll have an opportunity to make some money in that until they become profitable. That's the only way I would play Palantir.